Opinions don't pay. Forecasts don't pay. You know what pays? Price pays. This is Pat Walker, Mission Winners. There's two types of capital in the financial markets. And yeah, I've got a degree in psychology and I've used it to help get a grasp of what's going on. But you don't really need to overthink it. There's a tremendous amount of information to make solid decisions in the charts, price and volume. You can sit there and look at a stock and say, oh, it's a great company, it'll come back. It'll come back. It's okay. Please, banish that thought. It could come back. It probably will come back. But how far will it go before it comes back? When we accept the fact that we don't know the future, we see the future far clearer and we can act accordingly with just a cold, hard, calculating method and tactics in order to control risk. So you can look at MasterCard. It's like, oh, it's going up here. This is all right. By the way, this is a Maxless stock. Okay, it's okay. There's no problem. It's MasterCard, gee whiz. You know? It's down, but it's all right. It's just down to the 8. No problem. Oh, down to the 21. We're okay. We're okay. Now I'm going to assume you bought it right here, breaking through these tops. Okay? Through this level right here. There you go. Push through. It's no problem. It's okay. It found support. Look, it came down and it found support at the 50-day. Everything's fine. It's going to bounce. Oh, it's all right. It ran up. Still got support at the 50-day. No problem. No problem. We can let it work. Yeah, it's down, but it's still close to the 50-day. All right, that's it's up a little bit now. Oh, that's all right. It's okay. And then you start getting this. And this kind of stuff eats you up alive. All right? This is bad for the pocketbook, but more importantly, this is bad for the head. As I stated, there's two forms of capital in the markets. There's financial capital and there's emotional capital. And if our head gets screwed up, our thinking processes, we don't think clearly, we won't make good decisions. And one of the best decisions we can make is this. And I say it all the time at Mission Winners. A clean and simple entry above that line, it's good above the line, it's bad below the line. A clean and simple entry gives us a clean and simple exit for a much smaller loss. Much smaller. 7 to 8%? What are you, crazy? No. So I'm just going to go through the max list and show you. There's MasterCard. What other stocks related to MasterCard? Oh yeah, Visa. Gosh, how's that doing? There you go. You buy it right there across those tops. Everything's all right. The reversal, the volume was less. It's down to the 50. I lost it. It's all right. There's no problem. And all of a sudden, a small loss turns into a problem. You're buried in it. Twitter, hanging in. Just kind of grinding, hanging in. Tesla tried to go, falls back. Got to measure risk. Lifts here. See that? Breaks across here. Starts to fall. It lifted through this line and ran. It lifted through this line and ran. It lifted through this line and fell. What does that tell you to do? You're wrong. Sell some off. Control risk. Square runs up. This is why you sell some into strength. If not, you round trip the stock. You have nothing to show. You buy right here or right here. You ran it up. You have nothing to show for it. NVIDIA. No entry right here, right now. Netflix. We bought this right here. Lifting through there. Look at that igniting bar. Those tops going across that line right there. Lifts up, pulls back, runs up. We sell into strength. Okay. Starts to fall and we sell more. And it's good we did, because if not, you now have a loss. We made money on this. Google. Entry right here. Some people did it. We didn't. Runs up. See that bar right there? Down on heavy volume. You've got to be careful with that. You can say, well, I'll be all right. Well, now look. Now you got a problem. Goldman Sachs. Tail bar, down. Reversal bar, down. Reversal bar. This is just ugly. There's nothing good with it. Facebook, hanging in. Perhaps it'll go. We'll watch and see. We had Facebook right here. Ran up big. You get a gift like that. Starts to meander. We'll sell a little bit off. Here's the beauty of that. By selling some up here into strength and then selling more, losing the 8, we made money. And if we hadn't done it, guess what? Well, it's good investment. I'm going to hang. Yeah, okay. Well, now you have a loss. Now you got a loss. Even though it rallies up, it comes only about to your price. So you're stuck in it. I don't like that. I don't want to be stuck in stocks. You know, we're not running mutual funds here. We're running our accounts. Baidu, up, and Chopfest. Look at this. Look at it. Closes up, gaps down the next day. Closes up, gaps down today. It's no good. Alibaba, just kind of grinding here. There's nothing special at this point in time. Amazon starts to go and gives it back. What do you got to do? You got to manage it. All right? It's good above a line. It's bad below. Right here. It's good above there. And you sure don't want that thing to come all the way back down to your price. We don't do that. And we didn't do that. Apple, entry could be right here. Lifts up. Maybe sell some into strength because whole thing's gone now. And let's take it a step further. You can say, frame it up against the market action. There's the S&P 500. Not good. And here's the NASDAQ 100 with QQQ. Look at that. Lifts up, gives it all back. Don't argue with it. Opinions don't pay. Forecasts don't pay. You know what pays? Price pays. We just watch it. Price and volume. Tell us everything we need. Just get in line with what it is.